Well, good morning, everyone. Welcome to our Thursday morning trading room. Start of another wonderful trading day. Yesterday, the market was actually fairly active, given that it was an FOMC day. Today, well, we're kind of off to a little bit of a soft start here at the moment. You can see here on the Geiger counter that I have here on the Raptor tool, you can see there was a flurry of pre-market buying and selling, but it looks like it was fairly evenly balanced. And now the Raptor perhaps giving us a soft, or the setup towards a soft edge sell. We've had this retest of the high. We might be looking at a failure here and maybe a move lower. It's just a minute or so into the open, so I'm doing my best not to get too crazy here, but actually we're getting a similar swing here on the hawk as well. Possible trend change signal here in the Falcon. As the NASDAQ looks for a little bit of direction. I'm always, trading the open is always a tough call. On the one hand, you can get some really pronounced moves out of the open, and on the other hand, it's almost as though it's a sucker's bet because the market hasn't really established any direction yet. If anything, you can see the market has been in an uptrend since the London Open. Not that it needs to remain in an uptrend, of course, but it is a consideration. The market closed yesterday just above here, just shy of 44.30 or 44.25, so there is a little bit of an opening gap here to deal with. I'm not sure that's going to be strong enough to move the market one way or the other. You can see here on the Raptor, we've actually produced a hard edge bounce signal. I don't know if I want to try that. It is a signal. It's the only thing that's giving me pause is the fact that it's so early and that it looks as though, you can see the width of these bars. We're getting a fair amount of activity here, and now we're getting a soft edge sell. I don't know, maybe it's just the way that I'm made up, but I'm always a little bit more comfortable shorting the market than I am buying it, or so it seems. And that's not to say I'm what you might call a perma bear, these buyers or sellers that are just interested in shorting all the time. That's not me. I will buy the market also. But this is one of those, well, let's test the water type trades. And I'm in here with two contracts, but ideally this is the type of situation that you really want to do with a single. When you see a market that's kind of moving a little bit, you think you might have a feel for which way the market is going to drift, but you're not sure. This is the time that you want to go in with a single contract. The reason I'm a little bit more bearish is what I pointed out to you the other day in the trading room, and in case you weren't there, let me build you a new chart and I'm going to show you. It's what's going on the NASDAQ on the daily. And not just the NASDAQ, but any of the stock indices. The E-mini, of course, is a big driver. Here's the daily on the NQ. And what's significant is this right here. How we've broken down through this little swing. If you let me enlarge this here for a moment, you can see the NQ. These highs are going to be a little bit difficult to formulate because we don't have proper wicks on these candles here. This was too early in this particular contract. But you can see we're kind of struggling here, aren't we? We've hit this trend line, and now the market's starting to get a little bit of a reaction. And what's significant is that we've broken through this low. Let me put the E-mini up here. It's perhaps a little bit more obvious on the E-minis. So on the E-mini, we've actually broken through. Now, all breakouts are not equal. Just because a market breaks a trend line does not mean that it's, full-blown bear market. On the contrary, sometimes a breakout of a downtrend line is actually bearish. Yeah, it may end up being bullish in the longer term, and I do believe the stock market will continue higher. But very often when you see a breakout like this, we'll see a reaction. Something to bear in mind for those of you who like to draw trend lines. The other thing with the trend line, of course, is you can see when the market starts to get a little bit shallow. See how it's shallowed up there? That was an indication that perhaps the buyers were going to take control of the market, and they did that in a big way. Right? It had some huge bars through here. All right, so just like I say, a little something to keep in mind. We're just testing the waters, as I said. We're right back here now with the highs at the NQ. And pretty much last chance for the sellers to try to knock this market down. No, they're going to give us a little spanking here in a second. All right, so it doesn't not look like the sellers are in control today. We're going to perhaps look to stay on the buy side. Yeah, Tony asked, do we consider the previous gap at around 44.50? All right. Oh, the yesterday's gap. That's a good question, Tony. Gaps, as you know, do have a tendency to want to get filled. And it obviously did not fill yesterday. So yeah, I think that's a pretty good call. Very often we see the market fill the gaps early, like what we're seeing here right now. The market got busy. It tried to move lower, didn't, reversed, headed higher, is filling the overnight gap. But yeah, that great big gap from yesterday, I forgot all about that. The market really didn't get outside of there, did it? We pretty much had this large trading range yesterday. All right, here's a first micro-macro cross now on the hawk. And I'm sure many of you can guess the problem we're having with this one is, where in the world did we cover this thing? This is the type of trade, because we're at the top end of this big trading range. And what I mean by big trading range is if we look at yesterday's session, see the eagle gives you a little bit of a better view here. Well, that was after hours. But during the session yesterday, that was kind of the top end. And see, we hit it in the overnight, and here we are again. So this is kind of the whole top end of the trading range, bottom end of the trading range down here. The hawk is producing a signal right here. I don't like to buy at the top end of the range if I can help it, because the market may well reverse from there. Okay, now our first micro-macro cross has since turned into a macro pullback, and the nice thing about the macro pullback is I actually have a little bit of room here to realize my profit objective before the market may once again turn and reverse. Now, this is going to be a tough trade, folks. Come on, get up there. Get up there. Give me one more bar and I'm going to sneak my stops in here. There we go. Okay. Hit the break even. Come on. Get up there. Oh, darn it. Shoot. I thought we were going to get that one. Jim says the bank index is still selling off. So that was a macro pullback that just came up a tick or two short of our profit objective. Now, I did roll my stop to break even, so that does make it, you know, a little bit more aggressive, but top end of the trading range and all. June crude plotting a little bit higher. Gold relatively quiet. All right, we're getting a late filter entry here on the Falcon, and I'm sorry I'm a little bit late on it. So the late filter entry signal produced right here. The key to the late filter entry signal is that the trend line never goes out of sync, but the filter did go out of sync. More importantly, it came back into sync. This tends to be a pretty high probability signal. Although Jim says the advanced decline's a little bit lopsided right now. We've got about 900 on the buy and 1700 on the sell, 1800 on the sell. So it's a little bit of a bearish flavor, but that remember the advanced decline is also relative to itself, so that's the starting point on the day. If we go from a negative 900 to a negative 600, that's actually bullish. And he says the DAX is also gaining some traction. Okay, we're seeing a little bit of activity here again, which we would expect. Oh, our macro pullback signal did We did get another macro pullback right here on the heels of this one. And yes, that one is worth trying also. And I'll show you why. See how it's continuing higher, right? We're getting little itty-bitty hints that the market's going to continue higher. If you weren't keen about taking it here, you can certainly take it above this little swing high. That would actually enable you to keep your stops a little bit tighter. I wouldn't necessarily put them right here, but I would, maybe place them a point or two below that swing. Okay, I'm just taking a look here in the room. I don't see him here this morning, which is unfortunate. I got an email from a DTS owner who's struggling a little bit, and I know these things happen, but what was a little confusing to me is the signals that he's taking. And I was hoping he was in the room so that I could help clarify some of these things and save myself a lot of typing. But I don't see him here this morning. You see, folks, and I'm sure most of you understand this already, but all these arrows or all these signals are not created equal. And I know you're saying, well, why didn't you guys program it to take the bad signals out? Well, I suppose that's a good question. The programmers did try to do that. The problem, of course, is there's a certain degree of discretion as well. And quite honestly, I don't know why they can't eliminate some of these orders, but all signals are not created equal. Therefore, like on the hawk, for instance, I don't recommend that you trade the yellow bar signals. Some of you may choose to trade a yellow bar signal, but I think the yellow bar signals are much better in hindsight. Here's a yellow bar signal to short. What's wrong with that? Why wouldn't you sell that? Right? There's nothing wrong with that. It's just as good as this yellow bar signal to buy. But I guess I feel his pain because he's taking some signals and he doesn't understand why it's not working out for him. Like he would short this sell signal on the Falcon. And my question is, why would you sell that? That's not anywhere near one of our high probability signals. Now, if you shorted this one, at least you could say, well, Eric, that's a trend change signal. Am I not supposed to short the trend change signal? And yes, this is a valid signal. However, again, you can't ignore everything on the left side of the chart. So when you take into consideration the context, if you're going to short, and you saw me try to short this market, right? It's not that I'm saying, hey, don't short it. I tried to short it as well. I tried to short a similar signal on the Raptor. Okay, the market is in an uptrend. The overall context at the moment seems to be bullish. We are getting a trend change signal. Maybe we should dial down the risk amount. Maybe we'll dial down the risk amount. Maybe we'll postpone our entry until we get on the other side of the trend line. Maybe we'll put our stop loss so it's above the swing high. This way we know if we get stopped out up here, well, we're definitely on the wrong side of the trade. You're not going to be right 100% of the time, but don't be chasing invalid signals. For starters, try to take the context of the market into consideration and try to set yourself up that if you are going to take a higher risk type trade, you don't get creamed if it doesn't work out. So let's play this one ahead. So far, no fill, no fill. Our signal is negated now because of this green portion here, but let's play with it a little bit. Let's say, okay, let's say we've got another really quick little trend change signal. It's looking like it's breaking the trend line, and we leave our order in. Okay, well, in this case, I didn't get filled, no harm, no foul. But even if I did get filled and I got stopped, I took measures to try to protect myself. And I guess what I'm saying is in his email, he's not giving me the reasons for doing this. I want to say, why are you doing that? That's not even a valid signal. Why would you sell so aggressively into what is obviously an uptrend? And like I say, don't get me wrong. You see that I do the wrong thing sometimes. Not all my trades are profitable. I take a couple stinkers. But usually when I do a stink bomb trade, it's because I've done one of the things I've just told you not to do. You know, I haven't taken into consideration the rest of the chart. I haven't taken a quality signal, or I've ignored the trend. Okay, I'm going to put my soapbox away now. All right. I don't know who's trying to phone me here every morning. It's a Chicago phone number. It's probably some broker trying to solicit me again. Okay, the advanced decline evening up a little bit, Jim says. We got just over 1,000 on the buy and just under 1,600 on the sell. And it looks as though we're kind of drifting sideways right now. So we may have actually had the right idea early on. We just got involved a little bit too quickly. Again, the hazards of opening range. The first few minutes of trading, they're so tempting sometimes. Okay, so we're parked here on the median line. We did get a sell signal here, although I would not necessarily treat this as a soft edge sell. You could make the case that we have a double top. here on the Raptor, in which case this would be a soft edge sell. Personally, I'd like to see a proper test of the extreme. Okay, the hawk transitioning a little bit. I could see a move here to the hard edge. 44.12, 44.13. I could see that being a possible objective. Primary support down at 44.04. Not much structure, I'm afraid, today. The best signal we've seen this morning was the, besides the macro pullback signal on the hawk, this late filter entry signal here on the Falcon. I would have been all over that. I don't know what I was looking at. Even that one, we may not have exited. Look at that. It just kissed the profit objective. Depending where you were in line, you may or may not have gotten out. At worst, we would have taken a break-even hit here, but how disappointing. Definitely getting some resistance here at the highs. This whole 44.25 area near where the market closed yesterday. Here's crude oil. Pardon me, here's crude oil on the Falcon, kind of trapped between the primary resistance and the median line. Fudging it a little bit to either side. Working a possible trend change signal. The trend change signal occurs when the trend line changes from red to green. And we get our characteristic little up, down, up pattern. Yeah, Jim says a head and shoulders in crude oil. Maybe, Jim. I know. He's looking at this. If you're wondering, what the heck is he talking about? This is a typical head and shoulders type thing where the market peaks and then fails. I call it a test of the extreme. Other traders will call it a 1, 2, 3 top or bottom. Others will call it an ABC correction. It's all the same stuff. It essentially shows you a shift in momentum. The idea with the head and shoulders is that you draw a trend line below each of the valleys, and then a break of that trend line is a sell signal. Some traders will wait for the subsequent reaction, which is almost certain to happen, and then look to sell this part after the reaction has occurred. I'm kind of bullish on crude though, and we are getting a buy signal. I don't know if I can afford it though. Oh, shoot. Let's try it again. Can I take it below that little swing? Yes, I can. This is the problem I have with trading crude. So I'm looking at the second push on this signal, on this trend change signal, to bring me into the market. If you are trading a market that tends to be a little bit more expensive, or if you just want to be a little extra cautious, although sometimes this leaves a little money on the table, you can actually let the signal engage and wait for the reaction and then place your order. You can see, I'm going to delete this here for a sec just so I can show you. Here is a sell signal. We have these lows nearby. You might be wondering, gee, I wonder if these lows are going to bounce the market. Well, let the signal engage, look for the reaction, and now you know where to place your entry signal. Right? You can set up your trade like that. If it continues lower, great. If not, well, you're not stuck in a trade. We've done the same thing here to the upside. We're on the primary line. We'll let the market engage. And now we'll cover it down here. And if it picks up the momentum, great. If not, well, then it's very likely to move the other way. Not a quality trade, by the way. I'm showing it to you because there's nothing else going on. If you're looking for a trade to shadow, that's probably not it, even though I do believe crude oil will head higher. Oh, while I was showing you that, we had a decent little first micro-macro cross signal here on the NQ, right there. So micro lines, macro lines cross. Well, what's more important than the lines crossing is the fact that the market went all out of sync and now is back into sync, right? So bar colors change, trend lines change, filter changes. Everything is back into sync. You could risk it all the way down here. That's the safest bet. When in doubt, go to the macro line or where the micro lines swing. And nice little trade there as well. Okay, so the NQ continuing to rally here this morning, which is, I guess, what they showed us early on. And Tony, I don't know if we're going to get 44.50, but if we get 44.40, that would be enough into that gap from yesterday that I would consider that gap filled. Anytime you get about halfway into a gap, you can consider the gap filled. All right, just waiting for a decent setup here. The Raptor gave us a nice hard edge bounce here, a double pullback. Buyers are just chewing through those orders. Did you notice the Geiger counter? Just hard over. And now the sellers are kicking in. So a fair amount of activity at this current price level. I think it's probably going to continue to slip higher though. Our crude oil trade just triggered, and I guess I could have shown you the first micro-macro cross on crude as well. When it developed, it wasn't so pretty. It looked like this, but it did have a couple things going for it. Namely, it was looking as though we were continuing to honor the overnight lows. At worst, it looked like we were honoring this morning's lows. Yes, it broke through, but it didn't stay through, right? It dipped through, reacted, moved a little bit higher. Secondly, we also broke this swing high. Whenever you see a market break a significant swing point, and I'm talking significant, don't, start micromanaging and saying, oh, well, hey, it broke this little swing point here, or it broke this swing point here. Yeah, technically those are swing points, but always go for the obvious. When in doubt, go for the obvious. So this is a pretty obvious swing point. It broke that swing point. We can normally anticipate two moves in the direction of the breakout. So there's move number one. We're anticipating another move. Here's a first micro-macro cross signal. It's a high probability signal. We could take a chance on that. And there we go. We're in the process of the second leg up now. How far will the second leg go? Well, nobody really knows, but typically the first leg and second leg are the strongest of the two. So if this is the first leg and we expect it to be as strong, we expect the second leg to be almost as strong, that means we could kind of guesstimate the profit target around 45.80. At the very least, a retest of the overnight high. If you were choosing to try to run that one out. Okay, here come the bears again. David's having a little problem here. David says, I'm wondering why I have different values on my support and resistance suite tools than you have. I have 24.5 as a session template and my settings as you told me. Any idea? All right, let's take a look here. Sometimes, okay, I have 10 days of data loaded. Are the values significantly different, David? Or are we just off a couple of ticks? Because believe it or not, even the way the data feed is compiled by your data provider may cause it to record the levels slightly differently. If it's only a couple of ticks, I wouldn't, yeah, David says it's only a couple of ticks. I wouldn't worry about it. So if you're reading 44.30, or mine says 44.31 and yours reads 44.31 half or 44.30 quarter, I wouldn't worry about it. It could just be the way your data is compiled to the way my data is compiled. It could be due to the fact I'm in the Pacific Northwest and you're in the Midwest or on the East Coast or whatever. Your figure may actually be more correct than mine. But all these little things sometimes add up to cause the calculation to differ ever so slightly. I very rarely treat these numbers as an exact number anyhow. I very rarely suggest to anybody, okay, the resistance line is at 44.31, go ahead and buy 44.31 and a quarter. Or, you know, the resistance line is 44.17 half, go ahead and short 44.17 quarter. Rather, because these are predictive tools, right? We're guessing. These tools are forecasting where the market is likely to react. I use them as a guide. So I see the market come down here. Okay, it's slipped a couple of ticks past 44.17 half, which is the median line. Does that mean that 44.17 half is not an influential number? No, not at all. Look at it. It's held the price down here, and it's supported the price twice here. So as prices get back to 44.17 half, whether yours says 17 half or 17 even or 44.18 for that matter, should I expect another reaction? Absolutely I should. And see, that's what we're getting right now. We're getting another reaction. Now, if your numbers were totally off, like if you were reading the median line at 44.12, then I'd have to put you in touch with Ben. There's something not quite right with the way our charts are displaying. See, so now we're getting our reaction here, looking at a possible trend change. And if we get the lower swing high, in other words, our retest of the high here, and we come back with a sell signal, that might be worth selling, or at least attempting to sell. It does appear to me as though the market's stuck in a little bit of a trading range today. Here's a first micro macro cross. Problem, no structure, right? Is it a valid signal? You bet. If I take it on the hash mark, I'm going to have to try to risk it fairly high to try to ride out this retest of the extreme, this retest of the high. And it keeps slipping a little bit higher, so I'll adjust my entry. And with a little bit of luck, it'll drift into a macro pullback and yellow bars, and then I can ignore it. Oh, there we go, yellow bars. All right. The buyers are at least stringing a little bit of effort together. The sellers, every time the sellers try to step up and short the market, they don't get very far, do they? Let's take a look here at the Falcon. You'll see what I mean. The buyers here out of the gate were at least able to push the market up for a leg. Sure, we went a little sideways. They made another rally. But look at every attempt the sellers make. This has been the biggest attempt by far. They're just not getting anywhere. Sellers tried to short out of the open, nothing happened. They tried to short here, nothing happened. Really tried to short here, the buyers just stepped up again. So now this is very important for the sellers. If the sellers are going to regain control of the market, they need to take control of this signal, this one that's forming right now. If they lose their grip on this one, then the buyers are going to push the market higher still. So this looks like a fairly decent opportunity right now. It's working a late filter entry signal. Our filter is out of sync. Our trend line is holding solid. All right, so I can tell you from the logic counter, if that signal prints, my trend line, my filter will also flip over to be red. See, it flipped over to be red, the signal printed, and now we're short. It's a good thing about the logic counter. You can forecast these kinds of things. In this instance, it didn't make much sense to try to enter below the swing low because I'd have to give up all this in potential profit before I even got an entry. That means I've got to move my profit target that much further and try to make the market move a little extra in order to reach my profit objective. It's going to be hard enough for the sellers to turn this market around. In fact, I could probably even put my stop right above here. However, I'm thinking if the buyers give it one more push and they just happen to get above 44.26, 44.27, I don't want to get stopped out just for a tick or two. That's why I've placed my stop above here. I know if the market reverses and takes out the highs, well then I'm definitely wrong about the trade. No shame in being wrong. It happens. This is trading after all. We are trying to predict the future. But if my filter starts to change over again, starts to get green, I do anticipate the sellers will give it one more push. Okay, so things not looking so good for me right now, but the sellers will give it one more push, at which time I'm going to get more aggressive with my stops. I'm doing my utmost best not to get too cute with adjusting my stops here. On every single bar you have traders who think the market's going to go up, and you have traders who think the market's going to go down. Actually, this is a signal also that I could have done on a second push on the entry. How we were talking just a little while ago. If you're unsure because it's a trend change, go ahead, let the signal engage. It won't usually run away on you. It won't, most times it won't do one of these where it just takes off and doesn't give you a chance. At worst, it's going to go down a couple of bars and then show you the limit. In this case, it happened the very next bar. Could have placed our low below there, and we would not be sweating the trade at the moment. Come on, just a little bit. What were the lows of the morning? Down here around 44.06, 07. That could be a reasonable target. If the sellers get their act together. So here we've actually got something resembling a buy signal. It's a very quick little trend change signal. Little trend line changes color, quick little up, down, up. Really? Is this all you guys are going to give me? Look at these bars. There's very little participation here. Come on, you guys. Here we go. Okay, so now the sellers are kind of drew their line in the sand. We got a couple of bars moving in our direction. The sellers are kind of saying, all right, we'll pick it up from here, from 44.27. We're going to start to press lower. If the market fails at this point, well, then I'm probably on the wrong side. So I'll get ready with a slightly more aggressive strategy. If the market trades a little bit lower, I'll switch to the parabolics and let the parabolics follow it down. See, it almost has this bear type flag to it, which is what I'm hoping for. I'm hoping for a little bit of a breakdown now. Trading near the top end of the trading range of the day. Will we see it break down and head a little bit lower? Come on, just give me one more bar here. Oh, you guys, you're killing me here. Well, they traded low enough to flip the parabolic over, but I don't think that's going to be enough. Let's see. Jim's asking, Eric, look at the NQ Raptor, please. Yeah, we're kind of getting a couple hard edge bounces here. I'm not getting warm, fuzzy feelings this morning. Oh, we just got tagged, or I just got tagged. A lot of sidewaysness. I don't like sideways. Sideways is hard to trade. Oh, was I too quick with my stop? Should I have left my stop above the big swing high? Oh well, got tagged there for a little loss. Yeah, Jim says the NQ's here on the 10 a.m. high. And what's significant about that, you may ask? Well, the first half hour of trading tends to be very influential most days. It's like the institutional traders get in, they get busy, they do their stuff, and by the time the first half hour of trading is over, they're done. They've done what they needed to do. They've drawn their lines in the sand, and they go take an early lunch. That's not true, but there's a lot to be said about the first half hour of trading. It tends to be when the most of the volume comes into the market. The first half hour and the last half hour tend to have the greatest volume. If you ever look at the volume chart on an intraday, in fact, we don't have much going on. I may as well draw you one. So we'll look at a 5-minute NASDAQ. Where are you, NASDAQ? There you are. And we'll do a chart with volume. Okay, so here's a NASDAQ chart. Oops. We'll make that a little bigger. And we'll put our candlesticks on. Oh. If this ever happens to you, that you get your candlesticks without your lines on them, it's because your lines are the same size, same color, pardon me, as your background. All right. FOMC minutes came out right here, hence the spike. But if you take a look at the volume that goes through the market, here is the So there's the open. This is an hour later. So right down here, the first hour of trading. After that, volume fairly slack until the FOMC minutes, and then notice the last half hour of trading. Here's this morning. First hour of trading, volume really significant. First 10, 15, 20 minutes, half an hour, and it's been slipping ever since. Hence the teeny tiny little bars that we're looking at. Yesterday, the first hour of trading, certainly the first half hour of trading, lots of volume. At the end of the first hour of trading, a little bit of a volume spike, and then not much going on until the close when everybody tries to get out. Oh, here, let's add a few more days. Oops. Here also, first half hour of trading, look at all the volume, and after that, volume relatively light, a couple of spikes through here. This close was not very typical, with just the single spike there. First half hour of trading, lots of volume, and then a little bit of additional volume into the close. That one too, not typical. This is more what you see. This is a typical day in the NQ, or any of the markets for that matter. Lots of trading first half hour, then the volume dips, and then going into the close, the volume picks up. Lots of volume early, the volume falls off, the volume picks up. So this is why the opening range is kind of important, because you get most of the traders expressing their views on the market during that first half hour or hour of trading. And these people are all putting money where their proverbial trading mouth is. But I'm afraid at the moment we got a whole lot of nothing going on here. Jim says the advanced decline evening up a little bit more. We've got almost 1250 on the buy and 1500 on the sell. So things continuing to have a slightly bullish flavor. But notice here on the hawk, a lot of yellow bars, a lot of sideways. Is there a report I'm not aware of today? I think the Bank of Japan has got a report coming out. Well, it's a banking holiday in Japan today. Yeah, Tony says all the reports came out early today, and the natural gas report was not anything to get too excited about. And I don't see anything coming out tomorrow as well. And what about Friday? Oh, Saturday, a couple manufacturing reports, but those aren't going to matter much until Monday. All right, well, not much to talk about. Well, we'll just let the market drift here a little bit rather than try to hop into something. The thing to do when the market is range bound like this is to just let it get outside of its range. If you were inclined, of course, you can try to sell the top end of the range and buy the bottom end of the range. But the best plan of action next to that is just let it break out, let it prove that it can stay out, and then buy. Let it break out, prove that it can stay outside of that range, and then sell. And sometimes you're going to look at a chart and you're just not going to be able to make sense of it. Sometimes the markets can be very confusing, in which case just leave it alone until you can make sense of it. Remember, we only need a handful of decent trades a day. All right, technically that's a first micro-macro cross. Again, it's one of these types of trades where you're going to need to, take the market context here into consideration. Try to run a deeper stop. I would certainly be all in, all out on that one. You did get enough out of it to clear a scalp. to tell you. We'll hang out with the market for a little while longer, but there's nothing going on here. Yeah, Jim says the DAX just put in another new high, but I don't know. Nobody's following. Everybody's just kind of moving sideways. The volume's drifted off to next to nothing. Jim says Zero Hedge had an article about the Japanese government and banks own 90% of their stock market. He says, what? I don't think that's capitalism. Yeah, I'm not sure there is any capitalism in the world anymore. The governments around the world are playing fast and loose with the economy, trying to keep from going broke, leaving the little guy to pick up the pieces. Well, you know what, you guys, there's really nothing going on here. I think we're going to button up the room for now. If you're going to hang out, shoot, I'm tempted to say I'd be more bearish than bullish, but really you can flip a coin on this one. The market is dead neutral right now. The buyers and sellers very content with what the market is doing. We'll give it another go tomorrow, but really there's not much point in hanging around here at the moment. All right, be careful. We'll talk to you later. Bye for now.